evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for Wednesday, the 22nd of January, 2025. I hope you're not freezing wherever you're at. We're about 3 degrees, 4 degrees in Chicago, and the temperature is going to go up now. Did you see that snow that hit New Orleans? What they say, 10 inches of snow? They don't have any snow plows. They don't have any equipment to handle that. I hope they have a good time with it, though, because it'll be gone fairly fast. But it just gives you an idea what's going on. Living in Chicago, I know that January is the time not to come to this city. It's the snowiest time of the year. By the way, we have under 4 inches, so we're not living up to that just yet. But it's also one of the coldest times, and that's what we're getting right now. After this, if you live here, your eyes change. You get happy because once you're in March, anything, you can be 70 degrees in March. I know that. And so February is our last real cold month, and we'll see what things happen. So we're already all about spring. Isn't that amazing? And I'm sure the Trump administration is about the same. They're getting a lot of laws passed. They're going to do, I think, the low-hanging fruit right away, which is the going after the felons that are here illegally from other countries. You know, people have asked me what I think. Are they going to go into the schools and get children and all that? No. Are they going into the farm fields to get people? No. They're going to rely, like they always do, on who's who, who's what, and where they can find the criminals, let's call it that way. That's the low-hanging fruit and where they'll go. Can they find 1 million of them is the big question. And when it starts will be the big question. This is going to be challenged, law cases galore. You know that's going to happen. But it's the way that it's going to be for the time being. The other parts, we haven't seen anything on the tariffs just yet. We hear a lot of talk about it, but haven't seen anything. But, you know, February 1st is around the corner. I am of the belief that there's still going to be moderation, not 25% tariff on Mexico. I don't think there'll be a 25 on Canada. Blanket tariffs. There could be select ones that hit numbers. I don't know. We're going to find out. They're working on it. If they're not working on it, they'd have done it already. Other countries have been notified. Look at yourselves, Europe and China. Today, they were brought out of everything. So we can see what is going on there. And now we've got to see what happens with SALT, S-A-L-T, and not what we eat with. Because now the president's changed gears again, told one of the New York reps, well, you know, I'm in favor of removing the cap. We can be in favor of removing it. How do you pay for it? We are dealing over a 10-year period. How many trillions of dollars? Where's that money going to come from? Even if you went and just took it up from a $10,000 SALT cap to $100,000 over a 10-year period, you're probably near $1 trillion. So you got to be careful with what can and can't be done in a logical way. But by the president saying, well, yeah, I'm in favor of that, doesn't mean that it's going to happen. Remember how to read these things. It's just his way of saying, hey, I don't have an enemy with that senator or congressman. I didn't say no to it. When we look at Ferrari, and let's just go to the charts and get a feel here. So what the market did, this is an important part. The market had an outside day up yesterday. If you take out the lows of an outside day up, it's a failure signal. And until the market takes out the highs of yesterday, the odds favor the market is going to try to drop down. Where to? Well, first, you got to look and see what the swing line doing. It's up, higher lows, higher highs. The 18-day average might well be that number at 428.60 right now. So before the market gets over yesterday's high of 438.68 via the pattern, I think the market has a better chance of going down to 428.60. When we look at what's stopping the market, it's what we said here yesterday. You've got your 200-day average. That's a rough number to get through, especially when you combine it with a Bollinger Band. If it had gotten through this, as I said, I thought maybe then you can get up here, but it's acting more and more like the market's going to want to consolidate what it has right here, plus the market is overbought. When we go to Dutch Brothers, you can see how the market here is pulling back a little bit as well. It is a market that is trying to get itself in line to embed, hasn't done it yet. It's overbought, playing back and forth. what it's doing is consolidating these values. The question is, does it have to consolidate lower or there? In CrowdStrike, here's what we've done in this market. These numbers are often so important to look at. If you haven't taken my enhanced courses, and you go to our website, iraepstein.com, under the word education, logical spot form, they're there. Here's an outside day to the downside. Inside day yesterday, but if you still take out this high as of today, why today? Take the course, you'd understand it. It has to happen today or it doesn't mean anything. If that's taken out, then wherever the Bollinger Band is becomes the objective. It's exactly what occurred. Now the market's met its criteria, and now it has to retell us what it wants to do. In Rivian, the market just acts here as though it was too much for this stock to handle, of hearing Trump saying he's going to do away with the EV tax credits. And if they don't hit certain numbers, will they ever get that money for the Georgia plant? There's targets there. Is that going to stay in place? You are oversold. I frankly think you'll have hard trouble getting and staying under 1216, which is the 100-day average to the lower Bollinger Band. But that might be an area to cover shorts. It's not screaming, come in and buy me. In KWEB, which is the Chinese internet ETF, back off again. You're fighting a battle at the 200-day average and the 18-day. You've just gotten here. If it can pop to the upside off of something China says one way or the other, well, then I'd start looking at 2940. That's the close today, but I look at 3041. I made a mistake there to 3047. The Bollinger Band and the 100-day average. Those two numbers is the next resistance. I don't see a fresh sell on this market, and it is overbought. In Toll Brothers, I was looking for resistance, and I'm getting it right where I thought it would be. Right here, the first challenge of a 200-day average. Why? Because in early December to mid-December, you got under that number, and it's taken you now about 7 weeks, 6 weeks to get back to where you're at, and now it generally fights a battle there back and forth, and that's what I think is happening on the chart. In XHB, the home builders, again, the first challenge of a 200-day average in Bollinger Band. I'll let you want to add the positions there. You might be right. Guys like me would say to my client, hit them in the ribs and go, I think this is the spot. Maybe you lighten up or come out. In XLF, you have an overbought market that is running the Bollinger Band. It is not trending. This is a vertical price rise that ended up latching onto the Bollinger Band, and it's not stopped from that point of view. Okay, it's still a bullish chart in terms of momentum, but not a trend. You have the lower and low, higher high. Wouldn't know where to even put a stop on a position if you're trying to be long. And XLI is the same type of pattern. So I view these as a lot of patterns coming from the Trump presidency, the inauguration, the bills that he's signing, those type of events. But now the reality is going to set in very shortly. You're going to get used to what he can do and what he can't do. That doesn't mean there won't be deportations. The question is how many. I can go on and on. That won't mean there won't be a change to the SALT number. That could be $100,000. I have serious doubts about that. Maybe 20,000 can happen. I mean, you have to go into moderation on a lot of what's going to take place. And remember, the cabinet's not even in place. What's taken the Senate so long to either approve or disapprove these people? Higher lows, higher highs, pulling back into these ranges right here. Then we get to the gold market, which is now, if we take a look at what it's doing right here, we have both numbers over 80, both over 80 on Tuesday, and both over 80 the day before. So you have a fully embedded reading, which tells me on good breaks in the market, start buying. Bail if the red line closes under 79 would be my theory, and looking to see just how high it would go if it stays in the uptrend. I don't have that pattern in the silver. I see an overbought market fighting at a 100-day average in green in the upper Bollinger Band, that's difficult. It's not the same type of picture as gold has. And in the copper market, I'm going to repeat, I don't think that this market's the place to be. I haven't seen China, which is 50% of the world consumption of copper, in good shape on anything. So I could be very wrong on this. Do I think they hit their 5% growth target, as they said? No, I really don't. I think that they'll tell you what you want to hear as they put their arms around Putin and do their thing. And it's just a matter that if they were transparent, I could believe it. But when they don't like how the stock market goes, they stop short selling. If you want to dump a certain amount of shares, the manager has to approve it. He may not. It depends what the party wants to do. You want to keep track of electricity usage so you can measure industrial production. They'll stop that. Unemployment gets too high in youth. They stop reporting it. And you're supposed to believe things in the market. That is the difficulty with certain things that they do. In BND, a lower low, a higher high. So what we've had here is definitely a rally that broke the downtrend. Now the question is the market really in an uptrend? And it isn't so far. This is the reaction to breaking a downtrend, but you're instantly overbought. Not seeing anything I'm in love with there. In the dollar, in the futures, you held key numbers today. Will this market be able to back up? Get itself packing and going back up to 29.52 is the question. Right now, everything's against it. You're under the 18-day average. The bias is down. The trend is down. You've got to get all the way back up here to negate the downtrend. This market looks worse than the futures, but they're both not in uptrends at this point. And in the euro, maybe you can get up to the upper Bollinger Band, but sooner rather than later, the market's going to realize you've got to start cutting rates in Europe right away. You can't wait. The U.S. can wait, and that rate differential often makes for heck with foreign currencies versus the dollar. And we're just getting to the point where at the end of the month, you're going to get all these decisions made. So I see this as a relief rally. I see this as the end of a break in a trend. And now the market's got to decide, is this really an uptrend that can last? I have my doubts, but if it does, the first target is 96.66 and the support on the pullback is 95.43. And that's the thing. You've got to learn what you think the fundamentals are, but go to the chart and turn off your brain on the fundamentals, because nothing I said on that euro is bearish right here. And even though I lean to that going to be the case, I wouldn't trade it that way. And you've got to learn to differentiate between the two. It is a very difficult task. You can do it. It just takes some time. The smartest thing you can do, and I tell this to people, take the name off the chart. What would I do with that pattern? Bingo. That starts you going as to what you would do. I'm Ira Epstein. I'll catch up with you first thing in the morning. You have a great evening.